Hello, dear friends. Welcome back to CryptoVision. Has the crypto market been making your heart race these past few days as much as mine? While Bitcoin was oscillating, many were bracing for a massive dive. Even some senior trader friends of mine were saying, this is it. If it doesn't hold here, we're looking at $85K or even $80K. Everyone was definitely on edge. But guess what? Bitcoin showed an incredible will to survive over the last 2 days. Instead of crashing, it actually bounced back. As I'm filming this, BTC has quietly climbed back above $89,000, once again challenging that psychological $90K barrier. This caught many bears off guard. Is the legendary Christmas rally finally arriving, just a bit late, to give us a year-end surprise? In today's video, we're going to dive deep. Is this rebound a dead cat bounce or a genuine recovery? Why is the $90K wall as solid as reinforced concrete? How can we protect our profits or even position ourselves strategically for what's next? This episode is packed with info, so stick around until the end. But before we start, a routine risk disclaimer. Please remember, the crypto market is extremely volatile and high risk. Everything shared in this video is strictly my personal observation and analysis, not financial advice. Every trade involves your hard-earned money, so please think independently and decide based on your own risk tolerance. Don't follow the crowd blindly. Investing involves risk, stay cautious, and capital preservation is always priority number one. All right, let's start with the technical analysis. Looking at the daily chart, things are quite interesting. Even though it looks like sideways movement, Bitcoin is actually struggling to break free from the heavy downtrend line that's been in place since the October highs. It's like a monkey pinned under a mountain, now stretching its limbs and trying to burst through. Now, here's the key. What levels should we watch? Let's look at the major resistance above. The first zone to watch is the middle band of the daily Bollinger Bands, right around $89K to $90K. This isn't just a technical indicator, it's a psychological line in the sand. Moreover, $90K has been the peak of the volatility range for several days over the last 2 weeks. If we can break and hold above this wall, it's a huge deal. It would confirm a breakout from the October downtrend, opening up massive upside. Only then can we confidently talk about a Christmas or New Year rally. If the momentum is strong enough, our next targets could be the $93K to $95K range. But we must also prepare for the worst surprises are the only constant in crypto. If this rebound just touches $90K and gets rejected, where is the support? For the short term, look at the $86K to $87K range. As long as that holds, we're still in a bullish consolidation. However, and I mean if we break below the lower Bollinger Band at $85K, you need to be extremely careful. Losing that final line of defense could lead to a free fall toward the $80K mark. At these levels, we're dancing on a razor's edge, full of hope, but needing to stay hyper-vigilant. Moving on from technicals, while today's rebound feels good, I have to play devil's advocate. Don't get over-optimistic thinking the bull market is about to explode again. Why? Let's look at some cold, hard data. According to CoinGlass, spot Bitcoin ETFs have seen total net outflows for 5 consecutive days. This means the big institutions in whales have been quietly retreating, and they're doing it quite decisively. Even more concerning is that the Fear and Greed Index has dropped again. It was at 25 on Tuesday, and now it's down to 21. What does 21 mean? It means the market is in a state of extreme fear. Most retail investors are still nervous. Confidence hasn't fully recovered, making the current buying pressure very fragile. You might ask, if it's rebounding, why are people still scared? Why is Bitcoin stuck below $90K? This brings us to a few core points I've gathered. Let's break down why $90K has become a steel ceiling. Reason 1. On-chain activity is freezing cold. Imagine a busy mall with no shoppers. If there are more clerks than customers, sales won't be good. Bitcoin's network is like that empty mall right now. Data shows the 30-day moving average of active addresses has dropped to about 800,000, a one-year low. This means retail and short-term traders are sitting on the sidelines, exhausted by the volatility. Without foot traffic, there's no buying momentum to break through. Reason 2. Exchange liquidity is shrinking fast. You might think Bitcoin looks stable at $88K, but it's a superficial piece. On major exchanges like Binance and Coinbase, inflows have plummeted. Coinbase, in particular, saw its inflows drop by over 63%. What does this mean? It means there's no new money coming in to take over. While long-term whales aren't dumping aggressively either, we are in a state of deadlock. In this low liquidity environment, the market becomes fragile. Any minor news or even a large holder accidentally hitting the sell button could trigger massive swings. Analysts are warning about 2 powder kegs. Below us, around $86K, is a massive cluster of long positions. If price hits that level, over $60 million in longs will be liquidated, potentially causing a downward cascade. Above us, around $92K, is the bear liquidation zone, where $70 million in shorts are waiting. Bitcoin is currently trapped in a tight box, waiting to see which wall it hits first. Next, let's talk about an interesting phenomenon. Crypto analysts have noted the US is currently the biggest seller of BTC, while Asia is becoming the biggest buyer. Have you noticed that recent price drops often happen while we're asleep and the US markets are opening? It's no coincidence. Data shows US spot BTC ETFs saw $825 million in outflows over 5 days. Even on Christmas Eve, institutions dumped $175 million while everyone was having dinner. Why are are Americans selling so aggressively during Christmas? Have they lost faith in BTC? Actually, the reasons are quite pragmatic and follow financial logic. First is tax loss harvesting, selling losing assets to offset capital gains taxes before year-end. Second is options expiry. Huge year-end expirations make institutions conservative. They'd rather hold cash over the holidays than risk volatility. Additionally, the Coinbase Premium Index has been negative, proving US buying pressure is weak and investors are retreating. In contrast, Asia has been the force holding the market up despite the caution. This creates a strange dynamic. Asian buyers are absorbing the supply while US institutions are dumping it. This is the primary reason BTC is stuck below $90K. Imagine being the one buying up the supply, only to see someone else constantly dumping trash from above. Would you push higher? Of course not. You'd focus on holding the line first. You might wonder, what's next? Will institutions return? Many analysts are hopeful, viewing this sell-off as seasonal, like a year-end clearance sale. Once tax issues are settled and holidays end, institutional money should flow back. As soon as this year-end selling wave passes and ETF flows turn positive, our Christmas rally might just transform into a New Year's rally or a January effect surge. To summarize, not financial advice. 1. BTC is resilient, but with both on-chain activity and liquidity dried up, $90K remains a massive hurdle. Avoid high-leverage contracts here. 2. US year-end tax selling is the main sell pressure. Asian buying isn't enough to flip the trend yet. We need to wait for US pressure to subside. 3. A fear index of 21 is not a signal to buy the dip blindly. It's a warning to stay alert. Finally, one more risk warning. This rebound offers a glimmer of hope, but in thin liquidity, a single large order can cause scams or massive wicks in both directions, a nightmare for leverage traders. If you're itching to enter, I'd suggest waiting for a confirmed hold above $90K or a successful retest of $85K. The risk-reward ratio will be much better then. That's it for today's Crypto Vision. What's your take on this BTC rebound? Can we smash through the $90K concrete wall, or are you waiting at $85K to buy the dip? Let me know in the comments. If you enjoyed this and found it helpful, please like, subscribe, and share. It helps the channel immensely. Don't forget to hit the bell icon. I'm Crypto Vision. See you next time. Bye.